Do I need a tax-free savings account in 2025? The tax-free savings account is one of Canada's most powerful tools. Despite the name, it's not just a savings account. It's a tax-free tool so Canadians can save their money and grow investments without having to pay any taxes on it. My name is Sean Rampersaud. Today I'm going to talk to you about what the tax-free savings account is for, why everyone should have a tax-free savings account. So whether you're investing in stocks, ETFs, GICs, mutual funds, it doesn't matter. You can all invest it within this tax-free savings account. And every penny that you earn off of it is grown tax-free. So if you're looking at growing your wealth over time and you're trying to save money on taxes, this is the absolute first place you should go if you're looking at growing those investments. So how do you start investing in a tax-free savings account? Well, it's very simple. Any bank you work with has access to open a tax-free savings account. That account is attached to the government, and so the government has access. They know what's inside of your tax-free savings account. And one of the things that they do is they limit how much you can put in your tax-free savings account per year. So in this video, I'm going to get right into that. I'll tell you exactly how much you're allowed to put into your tax-free savings account right now. And I'm going to show you some charts on every year, how much they allowed, and there's always a reason for it. So some years they allowed as little as $5,000 to be invested into the tax-free savings account, and other years they allowed up to $10,000 in the tax-free savings account. But the good thing is all of those years accumulated. So if you're opening up your first tax-free savings account right now, you're allowed a very large sum of money in that account. So if you're starting to invest now, this is the first account you should open. The tax-free savings account came out in 2009, and it's a government-backed account that allows Canadians that are 18 years old or above to invest their money into the account tax-free. Unlike the RRSP, which allows you to have some tax deductions when you invest in it, the tax-free savings account does not allow for any tax deduction. Whereas the RRSP, when you withdraw the money, that is when you're taxed. So with an RRSP, for example, if you were starting to invest in that, you would leave your money into your RRSP until you're ready for retirement, and then you would start pulling out that money, and that money would come out and you'd be taxed on it based on that year's worth of taxes. So people assume that in your retirement age that your income would be lower, so then you would pay less taxes when you pull the money out. The growth on the RRSP over time, you don't have to pay the taxes on it until you pull the money out. Whereas the tax-free savings account has no taxes at all, but you don't get any type of tax deduction. So they're both very good accounts. However, the tax-free savings account is definitely the first place that you should go, because you could pull that money out tomorrow. You can pull that money out a week from now. So for example, if you wanted to use the tax-free savings account as a tool to buy a home, where they do have special accounts just for buying home, but let's just use this as an example. The tax-free savings account, you save 20 grand, turns into 25,000 over a 5-year period because you've invested it well. Well, that whole 25,000 you can pull out of that account and not pay any taxes on it. So why use a tax-free savings account? Obviously, it's for tax-free growth. So it could be growth of investments, it could be growth of dividend income, it could be growth of capital gain income. So any investment you want to make, you can make it within the tax-free savings account. You're also allowed to withdraw that money anytime without penalty. So any other form, whether it be a LIRA, an RRSP, if you pull the money out, then you have to start paying taxes on it. And right away, becomes a massive, massive negative, because then you're paying taxes on what your annual income is that year. So if you're 40 years old and you're making $100,000 a year, your income, your tax bracket is really high. So then you'll be taxed a lot for pulling that money out. Whereas a tax-free savings account, you're not taxed at all. So you can withdraw without penalty. There is no income requirements or benefits. TFSA withdrawals do not count as taxable income, and that's one of the best things about this. So it's essentially like a shelter for your money where it can grow and you don't have to pay any taxes on it. It's killer. It does not affect government benefits like old age security or CPP or any of those types of benefits. Whereas if you were earning income in any other device that the banks have created or the government's created for you, you generally have to report that income to the government. And then if you are getting old age security, you would get less if you had a significant amount of income coming from any of these investment sources other than the tax-free savings account. So there's a certain amount of contribution room within the tax-free savings account that you're allowed. If you were to pull out money from your tax-free savings account today, you have to wait about a year to reinvest that money if you're totally maxed out. So say, for example, you're totally maxed on your tax-free savings account. You've put as much money into it as you possibly can, but you need 10 grand from it to pay bills or whatever. So you pull the 10 grand out, you get your money tax-free in hand. You don't have to pay anything on it. And if you want to reinvest the $10,000 back into the tax-free savings account, then $10,000 worth of room has been now made available to you, which you can invest that 10 grand the next year. So let's talk about what kind of investments you can make within your tax-free savings account. So you've probably heard of a mutual fund. A mutual fund is a whole bunch of stocks together that a fund manager has created as a safer fund for you than an individual stock. So it could be many stocks. Very much like an ETF could be a group of many stocks. So you can buy mutual funds, you can buy ETFs, you can buy GICs in a tax-free savings account. You can just hold cash if you want in a tax-free savings account and earn a small amount of interest. You can buy bonds, you can buy precious metals. I actually use my tax-free savings account and I buy individual stocks with it as well. That works out really good for me. And I'm constantly buying and selling stocks. So you can do that within your tax-free savings account. Now, that being said, if you're day trading, you don't want to use your tax-free savings account for day trading because that'll prompt the government to say, hey, this is turning into a person's job in this account, and they don't allow for that. This is for growth of your money long term. So I think it's like best suited with ETFs or with mutual funds in that tax-free savings account. So I did tell you earlier in the video, every year they add a little bit more availability to the tax-free savings account. So one year they may allow you to invest $5,000, another year up to $10,000 in the tax-free savings account. The government will let you know based on what's happening with the economy how much contribution room is available. But if you're starting a tax-free savings account today, you're allowed up to $102,000 in total contribution room if you were 18 in 2009. 2009 is when the tax-free savings account came out, and at that time they allowed for $5,000 as your total contribution amount into that account. And for many years after that, they would just allow an extra $5 grand until 2013 when they brought that number up to $5,500. And some years, like I said, they went up to $10,000. This year, 2025, they allowed $7,000 in the tax-free savings account. So it created the total contribution amount that's available to you to be $102,000. So what's the best way to invest in the tax-free savings account? Myself, I have a tax-free savings account with Wealthsimple. They're one of the easiest companies that I've ever dealt with. It's a fintech company, so it's an online bank. And basically, they are allowing me to invest my money into my tax-free savings account. I buy stock, and then I have a portion of my tax-free savings account that's managed for me. So I've got $50,000 that I play around with, and I buy and sell stock within my tax-free savings account. And then the rest of the contribution room, I have a manager at Wealthsimple that's taking care of it for me. So I get to compare the growth of me doing the investing myself versus what an investment manager is able to provide me with. So the first thing that I would invest in is obviously you would put cash into your tax-free savings account. You can start anywhere. One of the things that I do is I contribute monthly into my tax-free savings account. So I have $2,000 a month that goes into the tax-free savings account, and it's accumulated over time and maxed out my tax-free savings account. It's fantastic. So once you have the cash in the account, you got to figure out what you'd like to invest in. Myself personally, I like to invest in ETF funds. ETF funds, I like the Vanguard funds. I like Berkshire Hathaway. These types of funds have tons of different stocks in them. So one of the ETF funds that I invest in right now is called VOO, and it's a Vanguard fund that follows the S&P 500. The S&P 500 has gone up by an average of about 10% per year. So that means if I have $100,000 and I had it in the S&P 500, every year I would be making 10% on that money, so $10,000 a year. And it's automatically reinvested for me into that fund. So that's one of the things that I do invest in, and one of the things that I think everyone should start out at if you're starting your investment journey. I'm not a financial advisor though, so make sure you do talk to a financial advisor before you invest in any of these funds. Put your cash in all you want. No risk to that at all. And a lot of these tax-free savings account will pay you a little bit of a higher interest rate because you're allowed cash accounts within a tax-free savings account. So imagine the tax-free savings account as a bubble. You're allowed a cash account, you're allowed a managed account, you're allowed to buy individual stocks, you're allowed to buy ETFs, all within the bubble of the tax-free savings account. And pay no taxes on any of this money. I also like to invest in dividend paying stocks. Dividend paying stocks are stocks that pay you out monthly, quarterly, or annually a certain set figure. So some of these funds will be 3%, some of them will be 5%. The 3 and 5% is over and above the potential growth of the fund. So you don't buy a stock or a fund at its highest point. It just really doesn't make sense, right? You would buy a stock or a fund when it's at a lower point, or you will dollar cost average. So slowly buy in little by little into an investment. And you can do that all within the tax-free savings account. So dividend paying stocks, pay me some of them monthly. I love that because you do get something every single month for the dollars that you have invested in the tax-free savings account. Real estate investment trusts. So if you're not into buying real estate directly, you don't want to go and buy a rental property or a house, there's these companies called real estate investment trusts. And what you can do is you can invest in those. They may buy hundreds of houses or thousands, or invest in mortgages, or be into development of areas. They oftentimes do pay a dividend as well, so they'll pay you monthly, annually, or quarterly. And you can also buy crypto within your tax-free savings account, but obviously be very careful doing that. It's one of the sketchiest investments. I do play around with buying crypto, but I only like to buy the real deal crypto, the Bitcoin, the Ethereum, the Litecoin, Solana, Cardano, those types of funds. And the growth on it is totally tax-free, which is awesome. So let's talk about some mistakes that you can make if you're investing in a tax-free savings account. Over investing in a tax-free savings account will come up with a charge, and they'll charge you 1% per month of the excess amount. So make sure the most that you've contributed is $102,000 only. If you use some banks' apps, it'll tell you how much you've contributed in total, and then it will also tell you if you've over contributed, and it will also tell you what your current balance is, and hopefully your balance is on the plus side. Trading too often. So if you're day trading, don't do it in the tax-free savings account. It'll prompt Revenue Canada to call you up and go, hey, what's going on here? Are you running a business? And then they'll charge it to you as business income, the money that you make in it. So you want to be investing for the long term. That being said, if you bought an individual stock and you see that the stock is going to plummet and you want to sell it real quick, and you bought it a month ago, then definitely do that. One-offs are okay, but if you're constantly buying, selling, buying, selling, buying, selling on a daily basis, then that's probably not the type of account that you want to do that in. You can buy in every day if you want to, and I do that. Well, like I said, I'm dollar cost averaging, so I'm buying a little bit of individual stock every day on an automatic kind of thing. So VOO, like I said, of the Vanguard ETF, I buy that every single day, $10 a day. Doesn't matter if the market's up or down because I'm averaging my way into it over time. And finally, holding US dividend stocks in the tax-free savings account. You can't do that. It'll prompt for US income taxes. So is the tax-free savings account worth it in 2025? Hell yeah. It's the first place you should be investing. If you have a checking and savings account and you got 10 grand in your savings account, pull it out and put it in the tax-free savings account. It's way better, and you can watch your money grow over time tax-free. The great part about it is you still get the flexibility to pull the money out whenever you want without any type of penalty. So get yourself a tax-free savings account, like and subscribe to the channel. Thanks for watching.